Fintech Innovation Unlocking Gaming Revolution.
I'm Jaguar. Since I'm in love with crypto and payments and alternative payments, challenges and new innovations in that sector, we've got here, I think we were lucky to have different points of view regarding fintech innovations, payments, visibility, privacy, and how that is changing nowadays. So that we're not going to be talking about all news and things that we've already known for the last, 10, 15 years, because everybody's been discussing that. Let's talk about what is changing, and most importantly, not just to know what's changing, because that's academic, no offense, but what we can do with that and how we can utilize that. So that's going to be the focus of our questions and discussions. What I do is I advise about regulation regarding AI and crypto and alternative payments. You guys are actually the ones doing this, or actually working with that. So just limit yourself to a sentence and a half or 2 sentences just to say what's the point of view from which you'll be talking about this, and present yourself in just 2 sentences so that everybody knows if we have an interest to say what we're saying, or just is it as natural and smart as it is. Please.
All right. Thank you very much, Jaguar. So my name is Leonard Soku. I manage a company called Open Gateway. We are a Pan-African payment service provider in Africa, obviously. We provide B2C and C2B payment rails in some African countries, and also provide settlements of these funds offshore in any GT currency or stablecoins as well.
Cool. There you go.
Hi, good afternoon. Simon Pepper, Product Officer for Tola. We integrate mobile money wallets across sub-Saharan Africa, operating now in 22 regions with direct integrations into over 50 operators, actually operating for the last 10 years, starting in Kenya, Tanzania, etc., process over 2 billion mobile money transactions. But again, we focus on mobile money, and so that's sub-Saharan Africa, excluding South Africa and Nigeria.
So we'll have some differences, and be able to analyze the differences among different countries within that region as well. So fintech is basically financial technology, right? So the point is of the segmentation of that is to look at how new technologies are integrating and helping payments, which is the finance part of it. That's new. That's old news. But we've had crypto payments ever since, 15 years almost, but it's growing. And now what is changing is that it's becoming more and more part of the B2B business, because it's getting more, I'd say, institutionalized, more companies and countries reserve, and also corporates reserves as well. So because it's spreading to be not just on a B2C level, but it's getting into the B2B as well, payments within Africa, within where we have challenges in some of the countries about regular, old-time, old-school banking, then we need to challenge this on a more of B2B point of view. And what's different? The differences would be mainly more regulatory compliance and KYC requirements and source of funds point of view, because corporates would be less willing to accept crypto, that some individuals would be willing to do that more. So I'd like to get a point of view of your experience regarding that, and if you have advice. And then I'd like to have a comparison of the most innovative countries so far that you've been working among with Tola, compared to the, I'd say, less strict of them all. And that would be very useful information for all of us. So please start.
All right, thank you very much. As you rightly mentioned, I think there's a gradual shift from traditional methods today in both B2C and B2B solutions. For our part of the world where we are now, aside the mobile money payments that are being done or heavily dominated in the African market. We also have virtual IBAN accounts being adopted in some of the markets that we are in. Aside virtual IBAN accounts, stable coins, deposits, or checkouts too are also being adopted for both B2C, C2B, and also B2B. We realize that some people who are offshore or outside Africa are able to fund, let's say, an account with players in the African market for, let's say, disbursements, right? So let's say you are an entity outside Africa, you have a solution that you want to more or less expand into the African market, be it collections or disbursements. There are entities that are able to receive stable coins like USDT, USDC, and then they fund your account in local currency. For example, KES, Naira, Ghana Cedi, ZOF, ZAF, etc. And then you use their rails to disburse to the mobile wallets of individuals or even to the bank accounts of these individuals. And then the vice versa is also possible, where you have, let's say, clientele in the African markets that you want to collect funds from. You collect local currency, Ghana Cedi, Naira, whatever, and then these entities can also settle you in fiat, either USD, GBP, Euro, or USDT or USDC. So those are the very innovative ways that are happening right now in our part of the world.
So your focus is mainly on the pegged coins or the stable coins. You're seeing that as the main progress of the industry, right? Could you give us a point of view of advantages, disadvantages of a more progressive country in which you've been working with compared to the less strict ones? So we'll be using that.
Well, we work with B2B on a B2B basis. So all of our merchants are regulated in-region businesses that are then providing services to consumers. So what we see is that the consumers aren't accessing crypto. They're accessing mobile money. And in the regions, many of the regions that we're now operating in, mobile money is the new technology. You know, M-Pesa Kenya was 18 years ago and is only now really becoming a trusted payment platform where people are prepared to leave their money in the M-Pesa wallet. Previously, they'd put cash in, put it into the merchant, do whatever they had to do with it in the merchant, and then take it out, and then take it back out to cash. So we're only now seeing, to some extent, trust being built up in those payment layers. You have to also remember that the majority of people that are using mobile money have these, right? And people think I'm crazy when I carry these around. This is my Mozambique phone. So this is on M-Pesa on Mozambique and Emola on Movitel. But when you're actually in region and you're talking to people, most of their mobile money is operated on this. You can't do crypto on this.
Yes.
You can't do crypto if you don't have a bank account. Right. You can't do crypto if you don't have a credit card, okay? Of which the majority of the population within sub-Saharan Africa, excluding South Africa and Nigeria, don't.
Right. So we have two points of view here. One that focuses on stable coins, that says that will be the edge part of crypto payments, and one that says, hey, leave aside crypto altogether for now. Let's focus on mobile phone only, because most of the at least in the B2C, is focused on simpler phones that will not afford even access to cryptocurrencies, none whatsoever. Is that the point?
But what they're also looking for is a speed of payment. They're looking for instant payments.
Yes.
So people are looking to put money in to gaming companies 5-10 minutes before a fixture. They then want their money when they hit the actual website or hit the whatever channel they're prepared to use. They want to see their money into their account, place their bet, and then when the event is over and they're awarded winnings because of their stake, they then want to then take the money out, and when they press withdraw, they want to see their money back into their wallet and into their hands effectively as quickly as possible. So it's speed as well as trust as well as accessibility of the payment methods, and that is what's driving. Keep it simple. You know, crypto from the majority of people at today isn't a simple process.
And again, we're talking about the B2C market, naturally.
Well, we're talking, and the operators to which we're selling, who are supporting those consumers, also want to keep it simple. They want to know that they've got their money. They want to know that they've got their money from their consumers into their accounts in real time, because ultimately they're then having to then leverage it to then do something else with. So
Interesting.
they want payment assurity that the money is in their account. It's not somewhere in the rails. It's not somewhere else on some other platform. They want to know that it's in their account, ideally in local currency.
Right. So that's an interesting point of view because typically a lot of the other countries globally would say that the B2B business would not want to touch cash, not even either mobile money or any other alternative payments because of the alternative part of them. However, what you're mentioning is that the businesses who are serving clients, customers, individuals, would still stick to those which are not anymore alternative payments, that mobile money as well. And that is a different point of view to the one that you're presenting, focusing more on stable coins and crypto payments on the other hand.
Yeah, so I mean, I understand where Simon is coming from. What we do is to offer multiple channels, right? Both for withdrawals and collections, right? We don't want to limit a customer when they go to our partners' websites or whatever. So aside dialing a short code on your MNO, like as you said, M-Pesa, MTN, Tigo, whatever, to make a payment from mobile money, which we do have at our place, we also provide extra rails as the stable coins. Now, people want to avoid charges or fees or levies or taxes that some of the MNOs or the governments will be charging on each transaction, and they would rather prefer to just do like a stable coin route for deposits or withdrawal, which is also quite seamless and quite fast, right? Depending on the country you are in, if you have a country that has very reliable exchange platforms like Binance or whatever, right? This is not a promo. I don't work with them, right? But like if you have a reliable exchange platform where you know you can always withdraw your stable coins to and easily convert to local currency and withdraw, why not, right? I always believe that as a player in the payment space, try and make multiple channels available to the market, right? So whereas someone who is probably unbanked or underbanked is more aligned to the USSD rails, they are used to dialing a short code to make a payment, that's good for them. If they are more tech savvy and want to do USDT rails, provide that for them too as well. And I think you're good to go.
So you're saying the challenge is not as strong as our colleagues is presenting this. So let me ask this challenging question. It would start with you, but you probably will have some kind of a solution to that. So what happens if we take that point of view that's saying the clients, the customers, and even the B2B2C, the businesses serving the customers, the individuals, are not, let's say, mature enough to adopt crypto and of course, for years, not regular banks. So let's stick to simple, very, very simple mobile money. So what happens with the businesses that are accepting that mobile money and what actually they're becoming a sort of an exchange, or that you guys are becoming the exchange, because eventually that mobile money needs to be exchanged or transferred and swapped back to regular money, either government money, fiat, what we call, or whatever else, which could be your solution. How do you deal with the fact that you might be stuck with inventories or supplies or liquidity of a lot of mobile money, which you actually need to either sell back to the operators, the mobile operators?
No. Mobile money is actually real money for the merchant. So when a payment is actually made between a consumer using mobile money and a merchant under our direct settlement model, where the merchant has their own account, they receive the cash in real time into their merchant account, which is then local currency.
Of course.
So they actually have access to the cash. They can then withdraw it out to a bank account and then use it as regular banking practices, of which, if they wish to, they can then move that, put it into a stable coin to then transfer and to use to repatriate to wherever they wish to for their own business purposes.
Okay.
Where we are finding and where we are seeing stablecoin or crypto being used is in the unlicensed gaming space. Now, the question is an unlicensed payment method being used, or unlicensed currency being used in an online gaming space, is that really the right thing to do for the preservation and security of the consumer, of the public? unregulated gaming means that they don't have to follow the same practices of KYC. They don't have to follow the same practices of responsible gaming. So therefore, they're introducing or potentially, making it open to the likes of exploitation of the consumer, and also the safety of the winnings that the consumer has got. If again, there's no regulation, and it's also an unlicensed currency or an unlicensed payment method or mechanism.
So basically, the operators and the businesses in our industry are saying that regulation is not an enabling one, but it's a blocking one, and we need less of that in order to promote the freedom of business and capitalism and entrepreneurships and innovations, etc. But you're mentioning actually that the lesser regulation will naturally bring more of the bad players, I would say, or less responsible players inside. So what percentage do you see in that?
It may not just be the less responsible players, but it could also be the less responsible operators as well.
Yeah.
Now I know, I'm getting into slightly hot water here at this event, but the gaming and the gaming market needs to operate and needs to grow. How do you get to your millions of active users? You do it while still looking after and preserving and building the base of users.
So you'd be considered a supporter of more regulation?
Well,
be careful.
again, regulation is good for the consumer, but it should also be good for the merchant as well, and therefore has to be entered into. If you're just going to bypass it and then just operate in a Wild West type framework, then there can't be the protections for both the consumer and also the operator, the merchant, the gaming company.
Well, because I'd be a great supporter of more regulation, because it's part of my business to advise regarding regulation, I want to hear your opinion. I bet you'll have a differentiating opinion about the more regulation required.
Yes, I know working with unlicensed entities can be a hurdle for a payment platform, especially because whenever there are issues or chargebacks or all these issues that come up, it can be quite challenging. What we do in some parts of the world, what we do is more or less have like a regulatory sandbox, right, for businesses that still want to operate where they're not yet licensed. So we have more or less limits or restrictions to how much they can process in with us or in the country, how much volumes they can do till they actually get their license. We look at where they are in their process of getting the license, and we try not to shy them away, right? So, but all things being equal, I agree, they need to have like strict measures around customer recourse, customer escalation metrics and all that. Because when that happens, when a customer has an issue and is not able to escalate back to the game provider and they go straight to the MNO or the regulator, then it brings hits for everyone, and we are all like looking for where to run to. But then again, I feel there should be some leeway for any gaming entity that's yet to get their local license to a degree, like have a cap on how much they can process or the rules they are exposed to, or have like special commercials for them till they get their license. That's what we do anyway. So yeah.
So yeah, you'll take a more of a
Sure.
easing up point
Yeah.
of view and approach.
Yeah.
So if we go back to the point of view that say that more regulation is needed or more strict or more relevant to that, you're coming from a telecom industry, or telephony industry, which is very, I'd say, more veteran in complying with telecom regulation or telecom-related regulation, privacy regulation or related one. Would that make it more useful for people playing and businesses operating within the telephony market and the mobile money market to adhere to such regulation? And this could maybe bias your opinion on that.
Well, yes, traditionally mobile money has been operated by the network operators, Safaricom, MTN, Airtel,
Right.
Africell, etc. But what we're also now seeing is new entrants in there that are operating like an e-wallet, but they're doing it through an app, whether it's Wave, whether or not it's Inbox in Zimbabwe, Wave's operating in West Africa, or that there are other solutions coming which again offer a payment solution which is then still mobile driven, whether it's mobile app driven, whether it's a USSD menu driven on the approval. But again, they're still operating it in a real-time manner. And it's all about the speed of payment, the simplicity of payment, and the accessibility of payment.
Well, I'll let you respond to that. Just to summarize, do you think it's going to be adhering more, moving towards the mobile money and mobile payments? Would not that be a present solution that would be short-term, because in a few years, the community and the population would develop even more, and banking services might develop even more, so it's going to be only a short-term solution? I'll have you take that because you'll have a different opinion.
I think it's still going to be long-term, as Simon is saying, because looking at the demography in the African markets or African regions is highly dominated. More money is king. I pay with more money for everything. Even I'm buying a piece of gum, I use more money to pay for everything. No one really carry cash. I never carry cash. Always more money, right? Whether or not it will become obsolete or extinct, I doubt that. I feel it will take a lot of education from now, maybe 20 years probably, before we see it become obsolete, but not really extinct. Because looking at the year gaps, I'm a millennial, by the way. From millennial upwards, baby boomers, everyone is doing more money. Probably the much more younger generation are the ones who are doing a bit of both, more money and then stable coin payments. But the adoption still has a long way to go. And I think we would see a couple of years or decades before more money becomes obsolete.
Wow. Right, thank you. Well, I could say that, to summarize the discussion over here, that regulation that refers to finance and telecom, which would be the older generations or the older sectors that exist already, and to some level that regulation refers to privacy as well. These are the ones that will apply to, and they do already, to mobile payments as well as crypto payments. So the phases might change and would be several years with an advantage to one, and then several years with an advantage to the other one. But still, compliance to that regulation that is developing and adhering is crucial in that sense, and is one of the, let's say, stepping stone to get those industries onwards. So I want to thank you for taking part of this interesting,
Thank you,
differentiating points of views, and enjoy the conference. We're having great technology and great fun.